In March 2024, the FRC issued substantial amendments to FRS 102, designed to enhance the quality of UK financial reporting. One key change was a new model for lease accounting, based on IFRS 16, which will move UK GAAP to an on-balance sheet lease accounting model for most leases. The main impact will be to lessees with leases currently classified as operating leases. Under the new requirements, these leases will be recognised on balance sheet, such that a lessee recognises an asset, the right to use the leased asset, and a liability, the obligation to make payments. There are limited exceptions to this, largely in relation to short-term leases and leases of low-value assets. But for most operating lessees, this will represent a significant change to the current accounting. A key impact will be to gross up the balance sheet, but it will also impact profit and loss, including operating profit and EBITDA. Instead of a minimal balance sheet impact and a straight-line expense recognised in operating profit, as is currently the case, companies will instead have an asset, which they need to depreciate, and a liability with an associated finance cost. This means that the profit and loss expense will be front-loaded, but also that, generally speaking, operating profit and EBITDA will improve. Whilst there is a bit of time until the change is mandatorily effective, our experience from IFRS adopters is that identifying all leases and underlying contracts can be time-consuming. So that should be task number one. This is likely to depend on the number of leases a company has, as well as the type of leases, for example, leases of equipment, buildings, cars, etc. For some, an Excel-based in-house solution may be viable. For others, it may be necessary to implement new software or use an outsourcing option. The change will impact both the balance sheet and profit and loss, with both the timing and amount of expense recognised changing. As such, it is important to consider broader impacts, such as to KPIs, for example, EBITDA, performance-related pay, and debt covenants. It will also be important to consider how best to communicate the impact to stakeholders. For any business that has operating leases and would like to know the impact of the changes on their accounts, please do get in touch.